CMHC is a crown corporation, meaning it is owned by the Government of Canada. It has $3 billion in revenue and $300 billion in assets, which actually makes it the largest federally owned crown corporation. Now take a minute to think about that. 75% of household wealth is tied to housing, and CMHC is the largest federally owned corporation? It seems like the government and individuals alike have a lot of our eggs in the housing basket. Now, CMHC has a very succinct goal, which is to make housing affordable for everyone in Canada. That sounds lovely, ambitious, but lovely. The question is, however, are they improving affordability or worsening financialization? Well, what did they do? 3 things. First, they invest in assisted housing. Government-funded programs helping Canadians in need access suitable housing they can afford. That helps create household formation, and that's fundamental to society in so many ways. And this seems absolutely to align with the goal of improving housing affordability. Second, they provide mortgage insurance. What does that mean? Well, the home buyer or borrower needs a bank mortgage, so he pays a premium to CMHC for mortgage insurance. And then the bank grants an insured mortgage loan. In return, CMHC provides a guarantee that, even if the home buyer defaults, the lending bank will get their loaned money back. Now, this isn't some side hustle for CMHC. The insurance market is a for-profit business, and CMHC generates $2 billion from it. But that revenue doesn't come without risk. They account for 50% of the total mortgage insurance market in Canada, meaning CMHC guarantees $430 billion of mortgage debt. Now, we can assume having government participation in the mortgage insurance market clearly adds stability to the housing market, but it seems like CMHC is missing the mark on its affordability goal, because fundamentally, what does this insurance do? It protects the lender against borrower default. Third, they do something called mortgage funding, creating government-guaranteed mortgage-backed securities. What does this mean? Simply put, banks pool groups of eligible mortgages together through a process called securitization. The output is called a mortgage-backed security. These securities are then sold to investors. But these mortgage-backed securities are special. Before they're sold to investors, they receive a government guarantee from CMHC. That means they have the AAA investment rating that comes with the full faith and credit of the Government of Canada. CMHC makes $800 million per year through this program. And it is not absent of risk either, something that becomes abundantly clear when you consider how big this program is, with $500 billion of government-guaranteed mortgage-backed securities in force. Mortgage funding is missing the mark on CMHC's goal of housing affordability. It sure sounds like financialization to me. Heck, the process behind it is called securitization. Now, it already seems like CMHC lost track of its housing affordability goal, but there is more. CMHC also operates a special purpose vehicle called Canada Housing Trust. Well, what the heck is that? Do you remember the mortgage-backed securities that CMHC guaranteed through mortgage funding? The Canada Housing Trust buys half of them, or $250 billion worth. To finance these purchases, they issue something called Canada Mortgage Bonds, which are also guaranteed by the Government of Canada, and then sold to investors. And here's another twist. Some of the largest buyers of Canada Mortgage Bonds are the banks themselves. It would be reasonable to be a little confused, thinking this seems circular. But the important question is this. Why is the Government of Canada using CMHC to guarantee $900 billion of the Canadian mortgage market, especially during a period of such rapid house price appreciation? Is this really helping CMHC achieve its goal, to make housing affordable for everyone in Canada? Or are they just enabling the continued financialization of Canada's housing market? Last I checked, pushing prices higher by expanding credit doesn't make something affordable. It just makes lenders wealthier.